Hi. We will quickly analyze the 9th May charts for the Indian stock market. First of all, we know that we are in a war, almost like a war, if we don't call it a war, but at least somewhat like a war between India and Pakistan. That is first thing. So that is going to have a effect on the market. Mostly the sentiment will be negative. That is one of the effect. So that is what we saw in the morning. You see this, there is a gap down. You see this yesterday it closed here and on 9th 8th it closed here, 9th it went down here. So there is a gap down, first of all, market. That means the sentiment is hugely negative. See, if the sentiment is negative, it will be backed by data. What is the data? What is the data? India VIX. India VIX, it is backed by India VIX. If you see India VIX, yesterday it was here, today it is up. So India VIX is telling it is highly volatile. The sentiments are negative. India VIX is also saying that. Third thing that was telling us was we have a portfolio, a small portfolio, and that portfolio's 9th May's today's day PNL was negative. It was negative by a good amount, almost 3,500 rupees negative. So that also we use as an indicator overall. Uh, our portfolio for this one, a small portfolio, just for YouTube purposes, we have put some Nifty plus Bank Nifty stocks there. So the portfolio has Nifty and Bank Nifty stocks. BNF we call it. BNF is Bank Nifty. Okay, fantastic. So we know the sentiment is negative. How would have we traded that day? Okay, we didn't trade. We didn't trade on 9th of May. The reason is we are in the war. The volatility was high. It was up to 7%. The India VIX was plus 7%. The volatility is very high. Plus, it is a Friday. We don't want to lose the profits we made Monday to Thursday. We don't want to lose that profit on Friday. Especially war means it is some kind of a news day. We do not want to trade on the news. Though we were very much tempted. So suppose you had to trade, okay, as a training video. Consider this as a training video. If you got to understand how to know where could we pick trades. See, the first thing we do is we know there is a huge gap here and here. There's a huge gap. Now I will expand this. I will make this big. Okay, I will expand this, make this big. So one thing we know, we are well below CPR. You see this. This is the CPR level. This is the virgin CPR. We are well below the CPR. Normally, what we see is if there is a gap down. Now, lot of people say, hey, market will try to come to an average price. It will come to your moving average. Okay, so the moving average, this is the 9 EMA moving average. It will try to come there. So we came there. Okay. Now the thing is where we could have picked the tricks. That is point one we should understand. So what we could have done that day was we could have just marked the levels that day. So this is your level. Okay, this one and this one. The first candle, this was our level, and this is the low level. The first candle. Now it becomes very confusing sometimes which level is what. So we will edit this, we'll make it dotted. That is what we do in real life trading. We make this dotted. The second is we make this also dotted, and then uh, we use the same pattern, this dot, and click. Okay, and then the lower one is this one. We try to make this also dotted. These three things we have done now. Okay, now this is the level we have to target. So what happens is that the moment you get this first candle, the second candle, you see it came down. See, we all know it should come down. Okay, so market opened gap down, and from here it moved up. So we got a very big green candle, and there is a big tick here. This big tick indicates that there are a lot of sellers sitting between this range. Lot of sellers. That means there are sellers who are active in this zone. In this zone, you see sellers are active. Okay, so we have marked this. This is seller active zone. Okay, so now we have to wait for the price to come to this level. So 15 minutes. Now you need patience. If we were trading, we would need patience. How we will take the patience? It went here. We will just move the info. So it went here, it came down, tried to reach this level. Should we trade on the call side? We will never trade on the call side on such days. We know there is a war going on, market sentiment is hugely negative. We know there is a high volatility, so that's why it comes down so much, because there was a volatility of up to 7%. So it came to plus 7%, so it went up, it came down, and those kind of stuff. Okay. So we know we want to trade on the downside and not upside. So when it reaches here, we will not buy a call to reach that level, because that will not be a plus plus setup. That will be a B category setup. We want a plus plus setup. That is point one. So what we do, we'll wait. We'll wait to buy put. We'll wait to buy put when it will reach this range. We know that it touched this range, and both the places it is the same. We are heavy. So the second candle reached here. We will mark this level also. And see, our trading is very simple. If you see, the trading usually is it's a simple game. It's usually that we don't have patience to get and understand how do we navigate. So we wait for the price to come to this point. So it comes after, like, from morning you are waiting. You lose patience and you get into a trade, and then you can make a mistake or you can make a profit. But we will look for A plus plus setup. Where is the A plus plus setup here? A plus plus setup is absolutely here. I told you it should be in the seller zone. So we take care. This is your A plus plus setup. Why do we call it A plus plus setup? Any clue? Why do we call that? Any clue? Why is it a A plus plus setup? See, this is the point of liquidity. This is a point of liquidity between these ranges. So we will wait for the price to hit this point. The moment, the moment it comes within this range, we will have to get in. So what happens is it goes up, the price comes here, and we get into this range. So we can enter the trade. And what would be our stop loss? Our stop loss in this case, since the wick is very big, it could be this one. Can be a stop loss, because the market can go up to that point. Or if you want to keep a tight stop loss, we could have kept it here itself, slightly above this level. Here, somewhere here, we could keep the stop loss. Because if it is a SL hunting process, you see, SL hunting process, what it did, it went slightly above this level. This was our level, it went slightly above this level. So it will hunt the SL. So we could trade. There are 2 points of trade, getting entries. We could get an entry here itself when the candle closed for green candle, or we could have waited for XL hunting and get in here the moment it crossed this stop loss point and hit and cleared a lot of stop loss. So what has this guy done now? It has done SL hunting. SL hunting is in progress. SL hunting is successful. What will happen? The prices will move in the downward direction because SL hunting has happened. We have entered our trade. We will wait for our trade. Our stop loss would be slightly above this level so that we don't lose lot of money. So that way we can trade. And why are we doing this on the put side? We already established the reason. The market sentiment is negative. The volatility is very high. Our day PNL is negative. So this gives us three good reasons to get into it. Plus what has happened is it has hit the liquidity zone. This is where liquidity resides. Between these lines, the liquidity resides. So we have hit that zone. Okay. You can also call it resistance zone. Okay. And the resistance zone is also the liquidity zone. So now we enter the trade and we wait. We wait till what point we will wait? Till what point we wait for the trade to work in our favor? We we could wait till this level, this one. We could wait till here, because the reason we could have waited till that point is because the volatility is high, so the prices might go down drastically. Okay, that could be one point. That is one. The second is, we could directly wait till this point itself, the way it hits this point. Because see, what will happen now? What will happen now? I'll tell you. People will try to hunt the SL on the downside also. So the SL is, a lot of people will put their SL below this level. See, this is the obvious level. People are trying to do SL hunting. They will go for obvious target. They will go for, you see this obvious target. Okay, this is just a logical entity which tells the trader where to get in, where to get out. So it hits the logical entity here, obvious level. It will go slightly below this. So it went slightly below this. It went slightly below this, and it grabbed the stop loss. Right? It hunted the stop loss. We could have got out here. Okay, and we will never get in on the other side, because doing that would be classified as what? It would be classified as over trading. Okay, the moment you get into over trading, you are bound to lose some money. You can make some on some days, but you will lose more. So we just exit at where the stop loss hunting happens, and we are happy that can be the case. Or we can exit at this point also. The moment it crosses this line, we exit. So it depends upon what kind of profits you want. So normally what we do is we buy multiple lots. We clear out few lots here, 40% lots here. Okay. In fact, not 40, 60% we clear it here. 40% we keep it riding, and we see whether this stop loss hunting happens. This is how we could have traded. This is a A plus plus setup. This is clearly, I'm telling you, this is a A plus plus setup. How to find a A plus plus setup? How much setup we could find? How many setups? We could only find one setup. A plus plus setup, we could only find one. There are A, B, and category C setups here. Okay, but uh, if you want to trade and improve your win rate, you will have to be very miser with respect to picking your trades. So then what you have to do, see, if you're getting, if the frequency of your setup is so low in once a day, so what will you do? You would have to put more quantities, or second, if you are doing with less quantities, then you should stay in that trade for a longer time. Instead of getting out here at this level, you can get out here. Okay, but what requires, and what is required here, you need a lot of patience. Okay, you have to control your emotions. If you see that the setup I showed you, this is the emotion-less setup. You don't have to worry. The first thing when you get into a trade, the moment you buy in, you should not feel a fear of anything. Fear. You should not feel fear. First thing. Okay, greedy comes less later, but your fear factor should not be there. And how the fear factor will not be there? If you have clearly put your stop loss. Whatever happens, you will not increase your stop loss. Okay, that is the point number. Never, never increase your stop loss. Your SL stop loss, never increase. Okay, that is your rule. Because why you never increase? Because you have done all your analysis to arrive at a A plus plus setup. Okay, and your if your A plus plus setup sometimes does not work, okay, there is no point taking a loss at that point. I mean, you will have to take some loss, but that loss should not be a big loss. See, if we do not put a stop loss here, and if we put a stop loss here, it's a big range. Okay, so we do not want to take that risk for that big range. So in this case, for our A plus plus setup, most of the A plus plus setup will come with a small stop loss setup. Your stop loss should be small, and you should take a trade wherever you try to get a small stop loss. Okay, once you are in a trade, what you could also do, see, you got in the trade, it's moving in your direction. Okay, now you are worried that it will not come back. So what you will do, I will move my stop loss. So once I'm here somewhere, I will move my stop loss to the price I have bought, to the level I have bought, so that I make zero loss today. I want to make, I want to make, I want to make zero loss. So that's why I will make my adjust my stop loss, so that I know my trade has moved in my direction. I don't want to lose any money now today. Okay, that is one. Second is, uh, I want to exit. I want to make at least a 1:2 ratio profit. See, I'm willing to lose $1 to make $2. So in this case, we are getting it. We are getting in point here. We will put a stop loss just few points like up. Okay, but what that means is you are taking a 50 points, probably 50 points up. But for losing that 50 points, I want to stay in that trade at least to make 100 points. So 100 points is like, I'm already making 100 points. But if I stay till this point, I could have made 1:5. So ninth May's trade, we could have easily made 1:4 or 1:5. Okay, that was a good setup trade for us. Okay, friends, subscribe if you want to understand more how we identify the trades, how to pick the trades. There are obviously many more indicators you can use. A lot of them are lagging indicators. That means the price moves and then you come to know there is no use because you have missed your entries. So this way of trading is relatively more reliable with the setups. See you in the next part.